Asian and European markets are also reeling from the Trump tariff. Stocks in Hong Kong had their biggest one-day drop in nearly 3 decades. And China today accused the U.S. of economic bullying after Beijing retaliated with 34% tariffs on U.S. goods last week. Japan's prime minister called the tariffs, quote, extremely unfortunate after speaking to President Trump by phone. He's sending a team to negotiate with the White House. And in Luxembourg, European officials met to discuss how they will respond to the 20% tariffs on their goods. The U.S. is the largest export market for European goods. Germany's economic minister today urged the 27 EU nations to stay united.
If we, the rest of the world, are selling cheaper goods to the American economy, it's of use of the American economy. So even the basis of the calculation, how shall I put it, economical, philosophical basis is nonsense. I can only say to the European partners, we have to stay united. If you try to solve the problem on your own, this will not be successful.
Even Elon Musk over the weekend broke with the president and endorsed free trade with Europe. Take a listen.
I hope it is agreed that both Europe and the United States should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone between Europe and North America.
Joining us now is Jonathan Hillman, Senior Fellow for Geoeconomics at the Council on Foreign Relations. Okay, John, so Europe is trying to walk this battle between fighting back and standing up for themselves. They're trying to kind of strike a conciliatory tone as to not antagonize Trump. But what are we expecting to come out of the EU? Do you expect them to aggressively retaliate? What kind of position are they in? What would you do?
So the EU has been strong but quite measured to date, and so they've been putting together their lists of tariffs that they'll put on. So we expect that American farmers are going to get hit hard. They almost always do. There'll be other signature products, American motorcycles, bourbon, whiskey, potentially. But the EU leaders have been restrained because they do want to negotiate. They have not yet touched the big guns, but they've started to talk about what those might be.
Yeah.
So they've got a tool that was actually designed to respond to China after China was bullying Lithuania. And so we're now living in a world in which an anti-coercion economic tool designed to combat the Chinese is being potentially lifted off the table and pointed at the United States.
Well, one of the things we've been hearing from analysts is that this could potentially push the EU closer to China economically. Do you think that's a realistic outcome of these tariffs if they keep escalating?
I think anyone who's getting hit with U.S. tariffs right now is trying to diversify their trading relationships. For many years now, we've had companies who are trying to pursue a China plus one strategy to basically pull out of China to develop alternative supply chains. We now hear people increasingly talking about a U.S. plus one strategy. And so I don't think it's unlikely that we'd have partners who are talking with the Chinese, talking with each other, trying to figure out how to weather this storm.
And speaking of China, the president in the last hour has now threatened a 50% tariff on China if they don't withdraw that 34% retaliatory tariff. It's a lot of numbers out there. But how do you see this escalation with China playing out? It seems to me, you know, if you're asking populations to endure sacrifice, the U.S. doesn't have the best track record of being willing to do that. Who lasts longer? Who comes out if these two giant economies go to battle?
So I'm hoping this is a situation where it's escalate to negotiate and that we have sort of a ceasefire, and it will take time to negotiate. I think China has been preparing for this for months, and they have a much broader toolkit than the U.S. has. So they're threatening tariffs, but they're also going to restrict the export of rare earths that are very important.
Yeah.
They're going after some U.S. companies, and then they're also going to do stimulus domestically. They're gearing up to spend money domestically. The U.S., meanwhile, is looking at a tax cut.
So when you look at the global markets, how are they reacting to this overall? And is there anything that stands out in particular to you?
So I think there's a lot of wait and see. You saw it in the markets today. Everyone is on edge. People want more
jumping
certainty.
At any tangible crumb of good news. Yeah,
that's right. That's right. And so we need to be careful. I think in that environment, we need to get to a place where these talks can happen, and ultimately where there's a little bit more predictability and stability in whatever the outcome is.
All right, Jonathan Hillman, thank you so much for joining us.
Thanks for having me.